Welcome to Inside India. I'm JP Ong, and here are your headlines. Asian markets are lower after an escalation of the trade war between the U.S. and China that triggered a tumble in U.S. stocks last Friday. It's a big week for IPOs in India, with Tata Capital and LG Electronics India units set to hit the market following WeWork's lackluster debut. And we are hours away from the Gaza hostage release as a ceasefire holds that will mark a momentous turn in the two-year war, with President Donald Trump of the United States en route to Israel and will be then attend a peace summit in Egypt. Good morning, and as usual, we take a look at how Asian markets are trending this Monday morning. As a bit of a backdrop, perhaps, for Indian markets open in about 45 minutes. Take a look at how the wall of red actually just sets the tone, perhaps a risk-off tone for the Asia-Pacific region today. Keep in mind that Japanese markets are offline today, or closed for what they call Sports Day, as well as the Thai set also on a holiday out in Bangkok. But you can see that wall of red really hitting the likes of the TAIEX and the KOSPI, both more tech-heavy than its other peers in the region. The TAIEX now down by about 2% in Taipei. Meanwhile, the Shanghai Composite trading about 2/3% in the red, and the Hang Seng also plunging by about 2.4% in today's session. The market reaction comes after U.S. President Trump ramped up the trade war with China on Friday, threatening 100% tariffs on all Chinese imports starting November 1st. The U.S. will also put new export controls on, quote, any and all critical software. Then on Sunday, Trump posted that relations between the United States and China are still positive and that he still respects President Xi Jinping. Here's what he told the press on Air Force One overnight.
You saw the statement I put out that he had a bad day. And I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened, and I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
Well, let's get out to our China reporter Elaine Yu for Beijing's side on this and the latest trade data from China that's just crossing the wires. Elaine, break for us the numbers if you can, and let us know what picture it's painting for us right now.
Yeah, the latest trade data for September has just come out, and exports grew 8.3% in the month of September. That's much higher than the previous month of 4.4%, and also beating estimates. So that really underscores China's continued success in finding new markets outside the U.S., for example, ASEAN, Africa, and Latin America. And that should give Beijing a boost in confidence as it heads into these tough negotiations with the U.S., with the Trump administration just threatening higher tariffs, triple-digit tariffs potentially. And also imports are also growing 7.4%. In the month of September, much higher than the previous month of 1.3%. And we'll have to zoom into the details a bit later to see what's really propping up that demand. We know that domestic demand has still been weak with high unemployment rate weighing on consumption, but this big beat on imports could point to more imports, for example, of soybeans from Brazil now instead of the U.S. and other goods. And the Chinese Customs Vice Minister has said that China's exports have responded to multiple pressures and challenges this year. And the Vice Minister also said that the current external environment is still complex and grim with rising uncertainties. And indeed, after Trump threatened 100% tariffs and other measures, Beijing has signaled that it won't yield, it won't back down. The Ministry of Commerce said easily threatening high tariffs is not the right way to engage with China. And it said that China's position on trade war has always been, we don't want one, but we're not afraid of one. And now they have urged the U.S. to preserve the, quote, hard-won progress of negotiations. And the Ministry of Commerce has also defended China's export controls on rare earths that it expanded last week, saying that they don't amount to a full ban as they require licenses now. And they also slammed the U.S. for a series of new measures over the last month since the Madrid talks in September, including adding more Chinese companies to the entity list, and also the U.S. de minimis rule on high-tech exports, and also the port fees. So it's suggesting that China's latest measures are also responding to these latest U.S. measures, both on tariffs and non-tariff restrictions, JP.
So it seems exports growing faster than expected against the backdrop of those trade tensions that are escalating with the United States and escalated over that weekend. Elaine, thank you so much for that, and the very important updates with regards to China's trade status at the moment. That is something that markets here and across the region will have to take note of. Meanwhile, President Donald Trump is en route to Israel and is set to speak to the Israeli parliament this afternoon. This as a ceasefire between Israel and Hamas held for a third day on Sunday. Hamas is set to release all the remaining hostages in about 6 hours, more than 2 years after they were taken captive. In return, Israel will be releasing 250 Palestinian prisoners, as well as another 1,700 detainees in Israeli captivity. Trump will also head to a global summit in Egypt later to discuss the end of the war. More than 20 global leaders will be attending that summit, including UK Prime Minister Keir Starmer, French President Emmanuel Macron, and Indonesian President Prabowo Subianto. India will be sending its Minister of State for External Affairs, Kirti Vardhan Singh. Iraqi Prime Minister Mohammed Shia al-Sudani also weighed in on the peace process in Gaza in an exclusive interview with CNBC, saying there's still plenty of work to be done to restore Gaza after its massive destruction. CNBC's Dan Murphy also asked him about the possibility of Iraq normalizing ties with Israel. Here was his reply.
حكومتنا في نظام نيابي.
Our government belongs to a parliamentary system and is bound by the laws enacted by the parliament. We have laws that define the relationship with the Israeli entity, in addition to our principled position that this entity has, unfortunately, committed many crimes against the Palestinian people over decades. This reality we are witnessing has been painful. In my opinion, the Palestinians today deserve a better reality and a better future. And the world and the international community must support the rights of the Palestinian people. We support this approach.
And the Indian markets also come online in less than 40 minutes. Let's take a first glimpse at what Gift Nifty futures might be forecasting before the start of this new trading week. And you're seeing that Gift Nifty futures once again looking positive and again foreshadowing that perhaps we might see the winning streak or the rebound for Indian equities extend to about 3 days. Mind you that last week alone, they added about 391 points to the roster and is now back above that 25,000 level. But again, this also happening against the backdrop of a shaky equity outlook, at least for global markets, after that sell-off out in Wall Street. Now, in the Indian rupee also strengthening today, 88.71, but again, it is still close to its record lows of about 88.83, and we'll continue to see where the soft local currency actually trends as the week progresses. There's a big debut in the markets today as well, one of the largest issues of the year, in fact. Shares of Tata Capital will come online in over an hour. CNBC TV 18's Hormaz Fatakia joins us live now from Mumbai. Hormaz, tell us how it's looking for Tata Capital Day before their debut on the public markets.
A big day indeed for Tata Capital and the largest IPO of India in 2025 so far. Almost $2.25 billion being the issue size. It received subscriptions of around $2.5 billion as well. And it was receiving full subscription over a 3-day period. Now, if you take a look at the unlisted market rates currently, it's indicating a subdued listing somewhere around about its issue price itself, which is around about 326 rupees a share. And of course, these are speculative rates. You can't really take them into account. The listing price could be a lot different than what the speculative market rates are indicating. But if you take a look at the subscription figures as well, it was led mainly by the large institutional investors. The portion received for retail investors was just about managed to see full subscription over a 3-day period as well. It was a large IPO indeed, but if you take in comparison to the other large IPO that was open simultaneously, that was LG Electronics India, that went on to break many records over its 3-day period, was subscribed more than 54 times the total number of shares that were on offer. It ended up receiving bids as well that were almost close to $50 billion, becoming the first such Indian IPO to receive that kind of bids. So, and the stock will be listing tomorrow, and the unlisted market rates currently are indicating a very hefty premium for LG, but are indicating a subdued listing for Tata Capital so far.
So Hormuz, can we use the word froth here when we characterize the recent IPO rush in India? Because there are some who are raising questions about valuations at the moment, and perhaps that maybe it's just a little bit too crowded and people with limited capital have to pick and choose where they're actually going. What's your assessment right now with regards to the somewhat lukewarm debuts of those recent IPOs that we've seen in the last couple of days?
It's been a very interesting week for the IPO markets, the week gone by. In fact, Citi came out with a note calling India the IPO factory of the world currently. And last week has presented both sides of the IPO market. On one side, as I just spoke about LG with the kind of bids that it received. But there were two other issues that opened with a discount of almost 35 to 40% in comparison to its issue price. They were smaller IPOs, $50 million and less. And those two companies being Glottis and a company called Om Freight Forwarders, and those two are listed at a very steep discount to their issue price. There is another company called BMW Ventures that listed at a 25% discount to its issue price, went on to make 5 other lower limits in the subsequent days, and thereby eroding significant shareholder value. So it has been both sides of the spectrum when it comes to the IPOs. On one hand, you've seen hefty bids for issues like LG, and there have also been issues like the ones that I just mentioned that have listed at a very steep discount. And the fact that at least more than 50% of the IPOs are currently either trading below their issue price or trading with just single-digit returns in comparison to their issue price. So it's not been all hunky-dory. The right issues have been rewarded, but the other ones, where there has been a bit of concern, they have been duly punished as well.
Pankaj, that's Hormuz Fatakia from CNBC TV 18. Thank you so much for your assessment of the recent activities on the IPO pipeline, at least out in India. And now we're joined by Pankaj Murarka, the CEO and CIO of Renaissance Investment Managers, to help us understand what this means, if this is indicative of anything with regards to Indian market sentiment moving forward, and if it will guide how markets move towards the end of the year. Pankaj, thank you so much for joining us today. As Hormuz noted a while ago, a bit lukewarm actually with regards to the recent IPOs from WeWork, and also the muted expectations from the Tata Capital IPO, which is set to debut later on. I'm wondering if this lukewarmness, if I can call it that, with regards to the IPO performance, is indicative of anything with regards to appetites and sentiment in the Indian markets. Or are we making too much about the recent lackluster debuts of some of these companies that listed on the public markets recently?
Morning, JP. Pleasure talking to you. What you said, I think I broadly concur with that. There's no denying the fact that there is a froth in Indian IPO markets, and that's primarily because we're seeing very strong flows from retail and HNI investors into Indian markets. Given India's high savings rate and given the fact that households in India are underexposed to equities, over the last few years, obviously they've been feeling left out. So we're seeing something to the magnitude of about $100 billion being, coming into the Indian markets from retail and HNI investors, including family offices. And what we essentially, the froth we're seeing in IPO markets is nothing but a spillover of that strong flows that we've seen from retail investors. So undoubtedly, given the fact that India was the third largest capital raiser in the world in primary markets at $20 billion in the last 12 months, Indian IPO markets are frothy. But at the same time, I think markets are making a discerning, difference between good quality companies and companies which are priced, fairly priced, versus companies where probably the business quality, earnings quality are poor, and which is what is reflected in the lackluster listing for some of these IPOs, which have been priced a bit too rich, I would say, in that sense.
So if markets are a bit frothy right now, and perhaps IPOs right now aren't getting the same oomph or bang for their buck actually when they debut. Why rush into the pipe? Why rush into listing at the moment if it is a bit frothy or uncertain? Is this really more of a function of perhaps companies really needing to raise capital right now, regardless of how frothy or perhaps how uncertain markets might be at the moment? What are your thoughts there, Pankaj?
That is how markets are supposed to work all over the world. No one wants to miss the bus. Every corporate wants to grow and expand, and they need equity capital, and they want to raise capital when the going is good, because you never know when when the sun sets and the environment and the equity market changes, and it will be very difficult to raise capital in that sense. So in a way, it's good as well, because these IPOs also providing are providing an opportunity to absorb the significant amount of capital that's flowing into the equity markets. And as I said, we have some good quality IPOs as well. So it's not that all of them are poor, but yes, the fact is India is an expensive equity market. Outside of US, India is the most expensive equity market in the world. And that's been the case for last 20 years. So in the sixth year of this global equity bull market, when in the most expensive equity market in the world, valuations are bound to be rich, and which is what is reflected in both secondary markets and primary markets in India.
So Pankaj, let's talk about the valuations right now in India, because some say that this is one of the reasons why they're not exactly lighting up the stage at the moment. They're still up year to date, but again, not as impressive as recent years. Some actually do feel that perhaps on a price to book basis, it has already become more lucrative. But again, some say that there's still a need to see these valuations perhaps come down a bit more. What are your thoughts on whether or not the markets in India are correctly priced, or if they're a little bit too expensive right now?
Just to put things in context, JP, I think there's no denying the fact that, as I said, India is the most expensive equity market in the world outside of US. Over the last 1 year, Indian markets have underperformed the regional markets significantly. In fact, this is the biggest underperformance I'm seeing of India versus MSCI emerging markets in the last 16 years. Having said that, the underperformance is also driven by the fact that Indian economy has been in the midst of a cyclical slowdown. And I believe there's a growth reset and downward reset in India's growth trajectory for the medium term. For 3 years out, post-COVID, India had an average growth of 8.2%. Indian economy now is doing a real growth of about 6.5%. And I think probably that's the new normal for Indian economy, at least for the next 8 quarters. And the spillover, we've seen the slowdown or the cyclical slowdown in the economy spill over to earnings growth. For the last 6 quarters, earnings for corporate India has grown at mid-single digit. That's significantly lower than the mid-teens kind of a growth that India is used to seeing. But I do see the good thing is probably that the low point of this slowdown is behind us. And we expect, given the fact that the Indian government has infused significant fiscal stimulus in the economy to the order of something like $30-odd billion, which is about 0.7% of GDP, we think this stimulus is already showing early signs of demand recovery on the consumption side. So we think the second half for India of this financial year will be much better than the first half of the financial year. So we do expect some earnings uplift in the second half of the year. And more importantly, I think CY26 next year could be a good year for India, because we do see India's earnings growth going back to mid-teens kind of earnings growth after 2 years of slow or sluggish earnings growth. So in context of that, I still think that valuations can moderate a bit more, but it is not a bad time to invest into India, because the long-term promise of India being a secular growth story, long-term secular growth story, still very much remains in place.
Yeah, and again, as you mentioned, the sector earnings is expected to improve after a subdued last couple of quarters. Are there any particular sectors that might see more of an upside at the moment? And are there sectors perhaps that might continue to drag and perhaps might not be as lucrative as compared to some of their other peers?
Well, we like financials, and especially the banks and the larger banks in India, because we've had quite a slowdown in credit growth in India. But after the Central Bank of India, the Reserve Bank of India having cut rates by about 100 basis points and recovering consumption in the economy, we expect a revival in credit growth into India and going back to probably 12-13% from about 8%, which is what we're experiencing now in the next year. And the good thing is the large banks in India have a very pristine asset quality, and they're trading at valuations which are almost 20% discount to the broader Nifty index. So we clearly see a combination of cyclical recovery in earnings and probably an improvement in valuations playing out in banks over the next 6 to 8 quarters. So larger banks in India looks pretty interesting at this point of time. Also, given the fact that we are seeing a cyclical recovery, we expect a cyclical recovery in the economy, largely driven by consumption. I think the staples and discretionary consumption could be a good place to be in India over the next 6 to 8 quarters.
Yeah, and of course, also on the back of those GST reforms that everybody has been really drawing hope from with regards to a consumption boost in India. But Pankaj, I want to go to ask you while you're here about your thoughts with regards to the recent sell-off on Wall Street. Now, again, a lot of this, as with many of these market swings we've seen this year globally, have been connected to some of the tariff and trade tensions and jitters that have really gripped a lot of markets. This sell-off right now in Wall Street that's playing out also across the broader markets, how do you think might this play out when Indian markets open later on? And more broadly, how concerned should Indian markets be with regards to that and whether they're correlated or exposed to the recent sell-off we're seeing or the recent uncertainty that is being felt in global markets?
I think we'll see some sell-off or weak opening for Indian markets early in the day, but I do expect markets to recover in the later part of the day because foreigners, as such, have been big sellers in India all through the year. They've almost taken out about $20 billion from India during the course of this year. And what we see essentially is foreigners holding in India has declined by almost 5 percentage points to about 17% in the last 3 or 4 years. So foreigners have been taking money out of India, and to that extent, given the fact that we're seeing strong flows from domestic investors, and as I said, we do expect a recovery in the economy and improvement in earnings as we go into the second half of the year. So I think India is a classical buy on dips market. So probably it might also India's linkages to the global economy today are much lower because India has a very robust domestic economy, and that provides some sort of a flow to the growth in the economy and earnings stability to corporate India. So I think any dip because of global sell-off would be an opportunity to buy into India.
All right, so perhaps a little bit of turbulence, a little bit of shakiness, but definitely perhaps a potential comeback for Indian markets and the economy in the second half of their fiscal year. Pankaj Murarka, Renaissance Investment Managers, thank you so much for stopping by and sharing your thoughts on the markets and the overall economic outlook for India here on Inside India. Well, coming up, a new shakeup in Japanese politics. Sanae Takaichi's bid to become the first female prime minister of the country is now in doubt. But more details right after this short break. Do stay tuned. Welcome back. The latest major shakeup in Japanese politics, the Komeito Party withdrawing from its 26-year-long partnership with the ruling LDP, and just days before a parliamentary vote to select Japan's next prime minister. CNBC's Kaorin Joji joins us now from Tokyo with the latest on this. Kaori, we were this close to perhaps getting a new government in Japan. It seems that this has pretty much thrown a wrench into any plans to move forward politically. I mean, how frustrating must this be for the LDP right now, especially with this withdrawal that seems to have caught many of us, at least from the outside looking in, by surprise?
That's a very accurate description, JP. Japanese politics is in a mess. And a week ago this time, we were saying Sanae Takaichi could be the first Japanese female prime minister, but now the path to the premiership has narrowed considerably because of the bombshell that their coalition partner Komeito dropped on them just after the market closed on Friday. And the leader of that party saying, look, after 26 years, we're leaving you. Here's what the head of the party had to say. Okay, well, he basically said, look, I don't like the way the LDP handled the slush fund scandal. And to that, Takaichi-san said, oh, utterly regrettable, which is the understatement of the year in politics, because this could potentially usher in one of the most important changes in Japanese politics since the 90s, because everything is up in the air. This is a numbers game. We don't even know when this vote is going to take place. That's how close it is. But when it happens, really, you want to watch the lower house and the makeup of that. The LDP without the Komeito only has 196 votes. So they're trying to find partners to take it over that majority. What complicates things is if the opposition, the three main opposition parties, come together and unite under a single leader and put that name down. And that name is Yuichiro Tamaki. The CDP is saying, look, we'll back you if you run. It's far from a done deal, but if those three parties get together, they have 210, which would make it extremely difficult for Sanae Takaichi's LDP party to win this vote and could potentially end the LDP's hold on power. So everything is in flux, including the diplomatic schedule, because a week, at the end of the month, there was supposedly going to be a Trump visit to Japan, bookended by key events, diplomatic events in Asia. That's not a whole lot of time. And the market reaction today is a closure, but futures on the Osaka exchange on Friday after this bombshell were down 2,400 points, JP.
Yeah, and the last thing Japan probably needs is a high-profile political divorce to further muddy the political outlook out in Tokyo. Kaorin Joji, thank you so much for the latest with regards to the political outlook and the political landscape out in Japan, how it is shaping or muddying up. Well, coming up, amid India's red-hot IPO market, shares of WeWork India saw a new debut. We'll speak to the company's MD and CEO in just a bit. Welcome back. You are watching Inside India, and here are some of the stories we're keeping tabs on. The Kremlin is warning of a dramatic escalation in the Ukraine war, expressing deep concern over possible U.S. plans to supply Tomahawk missiles to Kyiv. President Trump says he's nearly made a decision, but wants clarity on how Ukraine might use them. The long-range missiles could strike deep into Russia, raising nuclear fears. Moscow says any delivery would mark a dangerous new phase in the conflict with the West. Dozens of fighters were killed on Sunday in clashes on the Pakistan-Afghanistan border in the most serious fighting since the Taliban took power in 2021. Pakistan's military says 23 of its soldiers died, while the Taliban says it lost 9 fighters, with both sides claiming higher casualties for the other. Pakistan accuses Afghan-based militants of carrying out cross-border attacks, which Kabul denies. The border has since been closed and tensions remain high, with Taliban's foreign minister, though, saying the situation is under control. Taliban's foreign minister Amir Khan Muttaqi there. He was speaking from New Delhi, where he also met the Indian External Affairs Minister S. Jaishankar. During Muttaqi's visit, India announced plans to reopen its embassy in Kabul, shut since the Taliban took power in 2021. The Taliban will also send diplomats to New Delhi, marking a new chapter in bilateral ties. Though India doesn't officially recognize the Taliban government, Foreign Minister Jaishankar said the move aims to boost regional stability and development. Analysts say the shift is driven by growing tensions with Pakistan and China's rising influence in Afghanistan. And U.S. Ambassador-designate to India Sergio Gore met Prime Minister Narendra Modi in Delhi, discussing trade, defense, and critical minerals. Gore said President Trump considers Modi a great and personal friend. Trump has imposed steep tariffs of about 50% on Indian exports, impacting $50 billion in trade amid tensions over India's Russian oil imports. Gore also met top Indian officials during his visit and praised the recent incredible Trump-Modi phone call. Modi also met the CEO of Anthropic, Dario Amodei, over the weekend. The AI firm plans to open its first office in India next year, aiming to tap into the country's booming demand for AI tools and talent as it expands globally. And Modi kept the AI conversation going with Qualcomm as well. After a meeting with the Qualcomm president and CEO Cristiano Amon, Modi hailed the company's commitment towards India's semiconductor and AI missions. The company recently said it is in talks with the Tata Group to leverage India's growing chip manufacturing capacity. And we are counting down to the market open in India, and this is how futures, GIFT Nifty futures, are now shaping up in a final check of where they're trending, and we're still seeing them foreshadow a third straight day of gains for the Nifty 50, just about 32 points in the green, or 32 points added when the opening bell hits. But all bets are off until that opening bell does ring. Mind you that the Indian markets, or the Nifty itself, added 391 points last week and comfortably lifted itself back above that 25,000 level. We're seeing the rupee also flexing today, just a little bit though, firming up against the US dollar, now at 88.72 on a day of strength for the rupee. But keep in mind, it is still close to its record low, or record week levels actually, of 88.88, and we'll continue to monitor the local currency as the market session progresses and as the week progresses actually. And a muted Friday debut for WeWork India. Shares slid 3% in the first day of trade, valuing the co-working firm at nearly $950 million. The stock opened just above its IPO price of 648 rupees, then dropped as much as 5% as investors raised red flags over high valuation and some governance risks. The company, which licenses its brand from WeWork Global, raised $338 million in an IPO that was driven mainly by institutional buyers. The flexible office space in India is seeing fierce competition as demand continues to soar. WeWork India operates across 8 major Indian cities. And Karan Virwani is the managing director and CEO of WeWork India, who joins us now a day after its much-anticipated IPO last Friday that some said was a little bit more subdued than we actually expected. He's here to help outline what this IPO means for WeWork India's own long-term ambitions and goals. Karan, thank you so much for joining us today. I do want to ask you first about your impressions about the listing and its performance on its first day in the public markets. Were you satisfied with how the listing went, despite some pointing out that it was a bit lukewarm amid some of those lingering concerns that some might be posing against your company, sir?
Yeah. Thank you, JP, and thank you for having me. Firstly, it's a very, very proud moment for the whole company and for WeWork India. On Friday, we were listed. Today, we'll have our first trading session. To look at the subscription, I think to start off with looking at the anchor book, if you kind of go through the names, we have some of the highest quality institutions, both domestic as well as international, that came into the anchor book. And in fact, we got demand that was way above what we were looking to raise just in that piece. I think what happened through the week is that we also were head to head with two of the largest IPOs ever in the last 2 years, which was Tata and LG. Both were raising $2 to $3 billion each, while we were sort of in the same window when you look at the retail and HNI bucket. So that did have some impact on our subscription numbers, but what came in and brought stability to the stock is the institutions which oversubscribed over and above what they were required to allocate. And today we have a book of very strong, long investors, long only investors, which is really what we want. And we're not concerned about day one or day two. We're here to build over the next decade. And India's commercial market and India's flexible workspace market is on a trajectory that is unlike anywhere else in the world. And we are leaders in that space, and we hope to capitalize on India's growth over the next few years.
Yeah, so but I'd like to get deeper into what the Indian office market looks like and the outlook for it right now. But I do want to focus on what was raised, $338 million equivalent, if I'm not mistaken. What are the funds going to be used for, sir? And what does this and how is this perhaps going to be geared towards helping WeWork with its long-term goals?
Yeah. So the good part is the business here in India, at least, has been self-sustaining and profitable over the last 3 years. On a month-over-month basis, we're generating enough free cash to sustain our capex requirements, as well as obviously the business operations. We're also sitting on enough liquidity even prior to the IPO itself. So the IPO was a complete offer for sale, which was, being able to return capital back to the promoters and the investors, which is WeWork Global, that put in money over the last 8 years. So the entire amount actually went to return all of that invested capital, while the business is sitting on great amount of liquidity and was on a growth path of over 20 to 25%, capacity growth over the next few years, and we've been sustaining that over the last 3 years as well. And with EBITDA margins sort of growing, or EBITDA growing roughly about 30% on a CAGR for the last 3 years, and something that we're on track to do even today. So the business will use its internal cash and maybe some cheap debt to fund further expansion, while the IPO proceeds went to return some of the capital invested back to the shareholders.
Now, Karan, you mentioned a while ago profitability, and that's something everybody asks even more and more now whenever we see an IPO. Some actually have pointed out, and looking at some of the recent financials, that operating losses actually at WeWork have continued to persist. And if it wasn't for some of those tax returns or deferred tax expenses, actually, we would have seen a net loss once again. Can you help us understand what's been keeping WeWork challenged on the operating profitability front? And when investors perhaps can expect WeWork India to start to turn that positive at the moment? Is there a timeline, perhaps a window, as to when you expect some of the hard work you've been putting into to help operating losses turn into operating gains?
Yeah. So, JB, actually, technically, operating profit and operating gains have been there over the last 3 years. Typically, in international markets, or where you see international accounting or an IGAAP standard, from an IGAAP standard of accounting, which is what we run the business on, where all expenses, including the leases, are taken out. And then, you have obviously everything below EBITDA as well. We've been actually PBT and PAT positive for the last 3 years. In India, we have to adopt what is called the Indian Accounting Standard, or Ind AS. And in Ind AS, the leases, which are the major cost for this business, are actually recorded below EBITDA and get taken, like an EMI, where the interest and depreciation of these leases are heavily upfront and then sort of, flatten out towards the remaining part of the lease term. And because of that technical way of accounting, you see a bigger hit upfront rather than later on in the lease term, which is leading to book losses or has led to book losses in the past. We have now already shown that we are operationally profitable even in the India's accounting standard. So what you're seeing and what I think most people are seeing are purely it's book accounting, and just because we've adopted this India standard, but on an IGAAP basis, and usually what any business would look at, even at an international IPO or outside of the Indian market, the business has been profitable for the last 3 years and is actually generating significant amount of cash flow, to sort of sustain that. So we are profitable and we will be profitable even moving forward.
Yeah, I think you mentioned the lease expenses. They're actually being taken out of the calculus. I think that's one thing that some of the analysts that we've seen, some of the analyst reports we've seen have actually pointed out, that lease expenses are something that have to be managed, and they feel that maybe there's a bit more that's being carried by WeWork India. Do you think that's a fair critique of WeWork India, or do you think, and how would you answer some of the folks who think that perhaps lease expenses might be a little higher than what can be stomached right now?
No, look, so I think on a reported basis, like I said, our EBITDA margins were roughly about 63%. If I look at it on an IGAAP basis, post the leased expenses, our EBITDA margins are roughly about 22%. 22% is almost double that of anyone else, not just in India, but I think globally in the flex space market. When you think about, the profitability that we're making, even on a total quantum basis, we generated roughly about, $55 million worth of profit last year, at an EBITDA level post all expenses, which is, to me, at least one of the highest, operators in the world across any flex operator, not just in India, but across, the entire continent and definitely globally. So we feel like the business that we're operating is probably better than any other operation there is anywhere else. And we're very comfortably covering the lease costs as well as making, generous profits over and above that, which just shows how well we've built and we're running this business. Again, the confidence coming from the institutions who have taken the time to actually understand the business, understand the financials, and, are happy to come in and take such a big position.
Yeah, so I think a lot of these questions also are arising because it's a growing market, and WeWork is in a good position, but it's also a very competitive market. If I'm not mistaken, you have the likes for instance of IndiCube and SmartWorks among some of your major competitors. How does WeWork differentiate itself, especially because from the outside looking in, it seems that competition in this market becomes very, very strong, and really trying to hold on to your market share becomes even more difficult as the space evolves. Talk to us about how you're viewing the competitive landscape, and if it's getting tougher for WeWork or some of your peers to actually hold on to market share or grow market share at the moment.
Yeah. So look, I think firstly, the indication that we have this many listed players who are growing is just, again, confidence in the actual segment and the total market. And it means that there's so much demand, and India's, flex market has a lot of growth left in it itself. We have picked our niche and, are clearly differentiated across all of these operators. I think to start with, the brand itself that we have is clearly a globally recognized category defining brand. Our members get to use not just spaces in India, but across the rest of the world as well. We have, looked at our real estate strategy as another key differentiator. We're very focused on grade A locations and grade A markets and top tier assets. And that's why we actually cater to some of the top tier businesses, whether it's Fortune 500 companies or the best Indian corporates, Indian startups, who are willing to pay a higher price. Our pricing is almost 2.5 times that of any of the other competition. The other thing is our product suite itself. We offer a desk for a day, and we do large-scale bespoke offices for some of the biggest companies in the world. And we believe that the future of work is going to have a lot of flexibility and the need for hybrid solutions, and we want to be the one to cater to all of them. And finally, I think if you look at the financials itself, our revenues last year were nearly double that of any of the nearest competition. Our profit numbers almost 2 to 3 times any of the other competitors that you mentioned today. So the scale of the financial scale of the business itself, so much larger than anyone else. We are clearly a differentiated mid to premium player in the market, and that quality and that flight to quality is something that we're seeing across Indian companies and clients today.
And to be fair, WeWork India has seen revenues over the last couple of quarters grow quite significantly and consistently at that time. Karan, I hope you don't mind, but I'd be remiss if I didn't ask you about this, because one of the things, I'm sure you've read the report that the folks at InGovern actually issued with regards to their concerns about WeWork India. They did flag some legal concerns. And again, all allegations at the moment, we don't know if these are true or not, in fairness. But again, it is something that's been pointed out as perhaps raising uncertainty and perhaps uneasiness from investors who want to come into WeWork India, who want to rate the stock at the moment. What do you have to say with regards to some of the legal issues that perhaps leadership at WeWork India is facing right now, and how that might be impacting or clouding the outlook for WeWork India? Because it is sort of important, perhaps is weighing on the minds of investors. Is there anything you'd like to tell us about how you're viewing these and what you have to tell investors who are concerned?
I think, while that was one report, there were countless other analyst reports that have been put out, which clearly show that the business has this long-term viability and is on a long-term path of growth and is a great long-term investment. The InGov report, to be honest, was factually incorrect. There's a lot of pieces in that which have taken convenient parts of our document and, have shown it in a negative light. But if anyone actually goes into that report and also goes into our RHP, will realize that what they've actually put out is completely, there's a lot of falsified information in that. We will take our time to sort of reflect on it and maybe put something out. But from us and where we're looking at the business, the fundamentals of the business are extremely strong. The demand drivers that we're seeing are extremely strong. You'll see that coming out in the Q2 numbers when we show the type of growth that the business has had. And over the next, few months, few years, decades, our idea is to just constantly do whatever we can to build shareholder value. So we're not very concerned with that report. From a legal standpoint, both the complaints have been heard in the High Court in Bombay. They have been reserved for orders, and we have received no interim relief given to the complainants. In fact, the judges had, sort of said that the kind of complaints had no backing, and really they had to sort of end the hearing basis that. So we're very comfortable and very clear that what we've done, what we've disclosed, where we are from a legal standpoint is above and beyond what is required from a company like ours. And we have no hesitation to make sure that anyone wants to look into it can happily come and look into that.
And as we notice right now, and I'm just looking at the open right now for WeWork India, sir, it's down by about 2.8% at the moment, extending some of those losses from the IPO. Is there anything else you'd like to tell us, perhaps to assuage investors, if you'd like to right now, about WeWork India, especially since we're seeing some of the jitters perhaps filtering through on your second day in the public market, sir?
Yeah. Nothing. I think that we're here for the long game. We're not here for daily trading. The numbers will speak for itself. We're clearly in a market and a leadership position that is new and will take some time to understand. And over the next, few months and few years, it will be clearly visible why we have built such a great company and why we're part of such a great growth story. So I'm not too concerned. And, honestly, we just put our heads down and build. And the numbers, like I said, will speak for itself.
And just quickly, Karan, you mentioned a while ago that you're about 8 cities. Just very quickly, how many more cities are expecting WeWork India to expand to in the next year?
So we are very focused on being within the top 8 metro cities in India because about 95% of all commercial demand still continues to happen in these cities. So our focus is to go deeper within the metro markets and the top tier cities because that's where these global businesses, Indian startups and Indian corporates continue to hire. That's where the talent pool is. I think you were just talking about Anthropic and them looking at setting up in India and chasing the talent.
Right.
Just one example of all the types of companies, global capability centers, etc., that are growing in India. And we just follow the demand where our focus, our portfolio is just to make sure that we keep growing where there is high demand.
All right, so focusing on the top 8 and going deeper rather than wider at the moment. That is the strategy, at least, for WeWork India as they continue to grow. Karan Virwani from WeWork India, thank you for joining us today, and all the best on the second day of on the public markets for WeWork India's own stock. Appreciate the time, sir. Coming up, we will track how Indian markets are shaping up as they have joined the trading day, and also a look at some of the movers and shakers in Mumbai after the short break. Stay tuned, we'll be back in about 2 minutes. About 7.5 minutes into the Indian Monday market session, we're seeing that they are following the likes of their peers in Asia Pacific, but not by much down, actually, just down by about 0.25%. And in contrast, we did see the likes of the TAIEX falling by 2% earlier on today, and the Hang Seng also falling by more than 2%. So again, a meager setback or step back, that is, for the Indian Mumbai benchmark. The Indian rupee also looking a bit firm today, a bit steady at 88.72 so far in today's session. But mind you, the Nifty 50, and going back to those equities, that means it could be in place to snap out of 2 straight days of gains. On the bright side, it is holding on to that 25,000 level breach, actually, but could also decline to below 25,200 if the sell-off continues and deepens just a little bit as the day progresses. The earnings season has just kicked off in India as well, and IT services giant HCL Technologies will be reporting Q2 numbers later today. The company is expected to report over 2% higher net profits and a near 10% jump in revenues. HCL Tech's growth in the quarter gone by is to be led by the execution of its earlier deal wins. Its peer TCS started off the season on a somewhat positive note. With a revenue beat, though restructuring costs put pressure on profits. Shares of HCL ahead of that report card, we're seeing them now down by about 0.25%, mirroring the broader Nifty pullback or step back today. Again, a meager loss, but again, not by much, just shaving a handful of points or a handful of rupees off of its share price. India is set to open up its retail electricity market to private companies nationwide, ending the dominance of state-run distributors. This according to a new draft bill by the Federal Power Ministry. Firms like Adani, Tata Power, Torrent Power, and CSC could expand their footprint significantly. Past efforts in 2022 faced stiff resistance from states. Most of the distribution zones remain state-controlled and financially stressed, owing nearly $7 billion to power producers. The new plan aims to bring in multiple private players per region, something current laws don't allow. The private players not feeling the love, though, right now. You're seeing a wall of red really hitting the likes of Adani Enterprises, down by 1.2%. CESC also trading 0.7% down. A quick look at the Adani group of stocks. In fact, we are seeing, and this also against the backdrop of the U.S. SEC, or Securities and Exchange Commission, saying Indian authorities have not yet acted on its requests to serve summons to Adani Group executives in a securities fraud and bribery case. In a filing to a New York court, the SEC said it has been in repeated contact with India's law ministry, most recently on September 14, but has received no confirmation. Founder Gautam Adani and his nephew Sagar Adani remain in India. The Adani Group has previously denied the allegations, calling them baseless. But as we can see here, only Adani Energy is finding some energy today, up by about 0.2%. The rest of the Adani portfolio, or Adani family of companies, down, with Adani Enterprises, we mentioned, leading losses down by more than 1%. Bollywood legend Amitabh Bachchan turned 83 on Saturday, with fans gathering outside his Mumbai residence to celebrate the occasion. Bachchan, who began his film career in 1969, has acted in more than 200 movies, including classics like Dawn and Coolie. In Surat, an artist marked the occasion by creating his portrait with diamonds. The actor remains a household name still, and currently hosts the Indian version of Who Will Be the Millionaire? And that's all the time we have today on Inside India. But do keep watching CNBC. Access Middle East is coming up next. Have a good morning.